Good evening, guys. I hope you had a great weekend. Um, okay, a quick one. You know how we do it. Want us to look at what is likely to happen this coming week. When it comes to gold, I only trade gold, so we're going to look at only gold. So let's see what is likely happening this very coming week. Okay, so this actually a plain chart. Uh, I'll put some annotations, or yeah, I'll put some annotations on the chart or lipstick on the chart. But I'll explain in a clear chart before I put the lipstick on it. Okay, so we walked through this and took out this low, entered this, completed this fair value gap right here. I roll all the way up into premium price of this and then give a ghost. Okay, so here's where the market structure change, okay, or shift or break. Okay, went into the premium of this, went into the premium of this. Probably a rejection block. And then we took out this low, roll all the way down, took out this low, and then this fair value gap right here. We went into this fair value gap right here, coupled with an inversion fair value gap right here. So that's a strong one. And went into the midpoint of it, of this fair value gap, and we roll all the way down. So where we are heading to this, or we are likely heading to this coming week, is probably the low of this low right here. And also we have a volume imbalance right here, volume imbalance right here. That's what after this low, that's what I'm expecting for the price to reach, likely. And if we are to move a bit, if we are to move a bit lower, then we likely clean these lows over here, this equal lows over here, and then tap into this fair value gap right here. So that's what I am expecting. And within this area or price zone, we have a breaker right here. Now we have a breaker right here. So I'm expecting market to reach into this fair value gap and then hitting the breaker. You know, already in this volume imbalance right here, we are already touching the breaker. Okay, the breaker or mitigation block, whatever you call it. Okay, we are already hitting this. So we take out this low and reach into this volume imbalance, and probably if we are to drop further more, then probably into this fair value gap. Let's first of all look at weekly time frame. So here's the liquidity right here. The low of this is liquidity over right there. And the low of this clean lows over here are also liquidity. So likely taking this low, run into these lows over here, and then to the mitigation block right here. And we have also some fair value gap right here on weekly time frame. But our main projection now is this low, to be content with this low, and then probably this low over here. Okay, so to if we are to open and then drop to this low and then this lows over here and onto the breaker, it's two things. We are likely forming, opening and forming the high of the week. This is weekly time frame. Likely forming the high of the week before dropping in below this low or clearing this liquidity, and likely clearing this liquidity also right here. And second scenario is as market open, we gap. You see that we gap, we open and gap, and probably walk through and then take this low and then run into this low over here. Then we push up. Okay, so that's two things that one is likely to happen. Okay, is that we open and then form the high, go up to form the high, then drop to take these liquidities right here. Or we open with a gap lower, run into this low, and then probably this before pushing up. Okay, so let me put the lipsticks on the charts. So these are my annotations. Before that, let's go to monthly time frame. On monthly time, we have fair value gap right here. Okay, we have fair value gap right here. That's the green big lines. Okay, big horizontal lines right here. And this one are for weekly side. Okay. And this rectangles are for daily fair value gaps and volume imbalance. Okay, so it's the monthly time frame is this is the purpose of me coming into the daily monthly time frame to show you this fair value gap right here. So you put it in mind. And as I said, I always say this, that when you draw annotations on high time frame, when it comes down to lower time frame, as low as even 1 minute time frame, you should be able to identify your drawings. Because if you drop down to lower time frame and you lost, you can identify the drawings that you made on high time frames. So you already lost in the market. Okay, so you always have to get all those things clear. Okay, and keep it in mind whenever you are on lower time frame and trading. Okay, so weekly time frame. When you look at weekly time frame, this is fair value gap for weekly time frame, and it's showing right here, and the notation is showing right here. And when you look at the monthly time frame, this didn't look actually like a fair value gap, but it's actually a fair value gap on monthly time frame. You see, that's kind of like a midpoint of this week. Okay, so it's 1 month fair value gap plus 3 months low. So let me go to 3 months low for you to actually understand this. So this 3 months low, you see how it is. So if we are to drop below this, that is kind of like uh, institutional order flow entry drill. Okay, so we go below this. That can be a very sharp when we open. Probably, if we are to stay within this month, if we have, I think, 1 month, sorry, 1 week for this month to end. So if we stay bullish on this candle, this particular month, and the following month open, and we go below this, that this area can be a very sharp area to return from. So look at its annotation, and you know how it is when market is bullish and it drop down below a 3 month low or a low, like a very significant low, monthly, weekly, daily low, and all that. You know how sharp they return. So you have to keep all those things in check. Okay. So 3 month low, and that 3 month low is actually a fair value gap on daily time frame, on monthly time frame, sorry, monthly time frame. So all these things are something that you always have to put in mind. Okay. And when market reach here, you see the reaction. When market take out this low, it's going to react the way it's supposed to be. Okay, so put this in mind. That's why you have to annotate them and have them in mind. Even when you drop down to lower time frame, you have them in mind. Okay, it's very important. So uh monthly fair value gap low, high, and then 3 months low. Okay, or quarterly low. First quarter of this year, this is the low of it. Okay, this candle actually opened in January. This candle open in January. When you look at now, you look down here. When I put the cursor on it, you look down here. So here, this open on 1st January 2026. So that's the first quarter. First quarter is 3 months, or quarterly low is every 3 months, or quarterly is every 3 months. So this open in January and has to end in what? March. Okay, so here you see it, and it's still in play. This is 3 months. So if this month end, meaning first quarter ended, then the next candle on quarterly chart, when the next candle open, is going to open in April. So likely dropping below this, then start to see a sharp uh, 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 bullish move. Okay. Okay, so this is a fair value gap, kind of. So low of, that is the quarterly low. And when you go to monthly time frame, it's a fair value gap right here. So this is a significant low. It's very important to put that in check. And as they are dropping like this, they are likely coming there. Okay, so put them in mind. And drop down to weekly time frame. You see it. Fair value gap on weekly time frame. This is the green line here, which I explained earlier, all coupled. Okay, and breaker or mitigation also sitting here. So here is actually a very high reaction zone. Okay, this zone is actually a very high reaction zone to push price up. Okay, so but before that, we have proportion block within this range. So this kind of like a liquidity, a low, significant low, and at least to be content when you are in a sell, when they take out this low, at least lay the majority of your profit out, because we are heading to a return soon. Okay, it's very, very important. Okay, so uh fine. If we are to drop below here and we are to open and form the high before dropping this weekly time frame to form the high, where are the possible areas for us to that will resist price to drop further more to these our zones? First one is this volume imbalance, weekly volume imbalance. Okay, weekly volume imbalance right here. I have another one right here. Okay, so when we go down to lower time frame, that's when we will see which one is likely to hold. Okay, which one is likely to hold. So first one, this volume imbalance and this volume imbalance right here. Okay, so market has to open. If we are to gap, then we are going to rush below this and probably reach here. Okay, probably reach these zones. But if we are to open smoothly and then form the high before dropping, then likely these are the possible areas for us to be looking for a sell. First one here and second one here. Let's go down to daily time frame. So right here, we have to looking for a sell around this zone. When we open and reach into this volume imbalance right here, then we look for a sell in our kill zones. And it has to show you a willingness to go down before you enter, because there are a lot of liquidities over here. But I'm expecting gold to go below this before we see a push up, this low, before we see a push up. It's very, very important. Okay. So all this coupled here, fair value gap right here within this mitigation of breaker block right here. Okay. And this is the weekly proportion block. All these candles from top to the down here, this is how it's showing on daily time frame. Okay, we have this. So you have to be seeing a willingness when we enter this an inversion fair value gap. What do you call? Sorry, a volume imbalance. It is going to serve as an inversion volume imbalance. Okay, to resist price to our expected area or price. Okay, this is a daily time frame, and this is another area. But I'm not expecting anything at all can happen. Okay, so just be looking out for a return around this zone. We're looking for a sell around this zone, and when it comes there, go to smaller time frame and see the willingness, see your signature, the willingness to send price down. Then before you join. If they are not able to return around here, probably go deeper into this one over here. Okay. So that's what I am expecting on gold for this coming week. Okay. For this coming week is very, very, very important. Low as 4 hour. So you have all this in mind. Likely open, go in here. We have immediate 4-hour rebalance here. And we have a fair value gap right here, 4 hour. So, and it's within the second volume imbalance, weekly volume imbalance. So by market opening to go up in entering this 4-hour fair value gap and touching this volume imbalance, reaching here and to the midpoint of this volume imbalance, that's likely closing the 4-hour fair value gap. Okay, and within this midpoint of the weekly volume imbalance, we have a mitigation block right here within the midpoint of it. So more confluence, 4-hour fair value gap closed completely, hitting the mitigation block right here, and also the weekly volume imbalance midpoint of or consequent encroachment of the weekly volume imbalance. So when they reach here and they are willing to go down, that's when you'll be looking for your whatever, your sell entries. Okay. So you see how they respected this over here. Let's go to daily time frame. It's daily volume imbalance. See how they respected it. They came all the way now to close it very nicely and please push up. Okay. So let's see what is likely going to happen. If they gap down, then likely rushing into this low, then probably to this. But if they are to open and go up to form the low, the high, probably we look out for this volume imbalance and probably this. And by looking at those areas, you can also couple this in mind. You can also put this in mind, this fair value gap, kind of, this area over here, fair value gap. So you can also couple that onto your chart, like put those annotations onto your chart and wait for a reaction at kill zone. Market most of the time return at the kill zones. Okay, so put those ones in mind. Okay, put those ones in mind. It's very important. Okay, so it might look kind of complicated for you, but here is how simple I can make it for myself. And if it makes sense to you, this really makes sense to you, then draw your own on your chart and then look out for it. Okay, look out for uh, your areas. Have it on your chart. Okay, have it on your chart and look out for it at your kill zone. Okay, look out for it at your kill zone. It's very important. Okay, so I wish each and everyone very successful trading week, and um, I wish you understanding of the market for you to be able to spot your setups and trade profitably. All right, thanks for your time. Please, when you have access to this video, share for others to also learn something from it. Okay, we are all in here to learn and become profitable traders. So if this makes sense to you, at least share it for others to also learn something from it. Okay, share it and for others to also learn something from it or have something in check for the week. If what where we build confidence from is when we do analysis and then you see your fellow trader do his or hers, and then you watch it and you realize that it's actually corresponding with your own personal analysis. That's when you get more confidence and also put things in check. So share it for others that have already made their projection for the week, maybe likely uh, 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 corresponding with my own, for them to also have that confidence to be able to execute their trade. Okay, it's very important. So just share. Somebody might also be having the same price projection. So when he or she watch this, there's going to be like a double uh, confluence, or that will give the person kind of like confidence to actually execute. Okay, so please, when you have access to the video, please share for others to also have a feel of it. Thank you. I wish you a very successful trading week. Peace out.